How's it going, everybody? It's Uzaifa Farouk here, and as promised, I'm going to be taking you through analysis of a random chart that I chose to show you how price action worked for each day. And in this case, it's going to be Monday. Unfortunately, I wasn't able to do this last night because I had family obligations, but I'm going to do it right now. So let's go through this really quickly. I have 15 minutes if I want to post it on Facebook, so let's just do it as fast as possible. Now, I kept two lines on here, which is the blue. And that's just for my current trade, and I'll try to take you through that if we have time. And also there's a mark, which is an alert, which will kind of ring if the price gets there and I can place a trade or analyze it at that time. So let's get into this. This is Monday right here, where I'm going to be highlighting. It's going to be Monday, so everything on the right side of this dash line is Monday. So let's go through it as if none of this stuff has happened. So in the beginning, what happens is it kind of creates a low and it has a pullback up. That means that this is probably support right here. But you're trying to see what happens with this market. Now, the bigger the candle on the reversal, the more strongly it's a candidate that it's a resistance and support. So before these two candles, this candle came up, the support and resistance was this, okay? Up, down, up. So that means this is resistance and this is support. You're not making any trades here. You're just analyzing and seeing what happens. And if it breaks, you're seeing for it to reverse and create a new level of resistance and support. So you go to the right and this candle forms. When this candle forms, you're waiting for a pullback. If it pulls back, you're waiting for it to touch this line here and create a new support. And if it does, it's going to shoot back up. And at that point, you can place a trade if you are not as risky. Okay, so it does a little red candle. Now, if it's a little candle like that, I don't usually count it as a place of resistance. I wait till the next candle to see what it looks like. And see, in this case, it continued up. So we're not placing any higher highs here until there's a bigger candle to the downside. Okay, that's a small candle too, so we're not going to put a resistance, new resistance there. But see, this is a big enough candle for me to put a resistance there and say that, okay, there might be a small retrace back down to the old resistance, which becomes the new support. And if it does become the new support, then we place a trade there. And okay, so it bounces here. Now you have the option of taking a call trade for the next 15 minutes or half an hour to even an hour to see if you suspect that it'll bounce up. I probably would have taken this trade, and for a good reason, because look how it shot up right there. And if it was a 15-minute call trade, you would have won way in the money. Excuse me. And now that it broke this resistance, you're looking for a new resistance. Okay, so let's see what happens here. So this part right here is a new resistance because this is a big enough candle to warrant a new resistance. So now it's going down. You're waiting for it to create a new support, and if it does, you have to see whether you can take the trade or not. So it touches this. You could take a place right at the touch. I usually wait for it to come down a little bit. I usually take multiple trades, as you've seen. Usually I trade it during the touch, and I trade it as it starts going down a little bit. Okay, so I can get a better and better price if I am sure that it's going to continue the trend. Okay, so far it's a higher high, so I'm assuming that there's a trend going on. And see, if you're taking that trade so far, you're in the money. And you would have won this trade if you had taken a 15 to 30 minute trade. So now it broke this old resistance, and you're waiting for it to continue up or reverse back down. Now remember, trends necessarily do not continue going up and up and up and up and up. Trends happen like this. Now this is an uptrend. Last time we did a downtrend, so now let's do an uptrend really quickly. Uptrends look like this, 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 this. Okay, now when it's an uptrend, always try to trade with the trend. Okay, don't necessarily trade on the pullbacks, okay, because you don't know where it's going to pull back, even here. So what you want to do is you want to trade with the trend. And where is the best place to trade with the trend? On the reversal. Okay, so right here, for example, this is a good place because it's a continuation. So when it tests support, the old resistance creates a new support, that's a good place to trade to the upside because you're trading with the trend. Okay, so let's see if this hits support again. And if it does, you can place another trade to the upside. Okay, now you're also looking for new resistance here. So this is a strong enough candle for us to put a new resistance here. Oops, wrong thing. Right here, and then let's see what happens. Okay, so it may create a new, so this is basically the resistance. Now we'll just take this this line here and create a new resistance. So let's see what happens. Now if it doesn't touch this line or come near it, you can also take it if it's near it if you want, and I usually do. If it comes near, touches, and if it goes down, I take multiple trades to the upside. Okay, so let's see. So far it's not doing anything. It's ranging, so you're not doing anything here, not trading or anything like that. So see, there you have it. It goes and touches this place, or actually it comes close to it. So I would have taken this trade to the upside. But remember, this trend could be exhausting and could be doing some random shit that you don't know yet. So let's just see what happens. So you would have been in the money if you had placed this trade for 15 or 30 minutes. Okay, now you're seeing if this retests this area, but again, you don't know whether it's going to shoot up. Remember, you're in uptrend right now, so you don't want to take a put trade. Alright, so this is the first time it's kind of ranged for a little bit. Not like these didn't range. These just retraced up, These is ranging a little bit, so you don't know whether it's going to touch this and go down. You can take the risk and put a put. I probably wouldn't, because I don't like trading against the trend. So it touched this. I would not, personally, I would not take this trade, because I would be, number one, using a counter trend. Number two, I don't know whether it's going back up again, because so far indication is that it's still an uptrend, and for good reason, because look how it just shot up past that resistance. So you're not trading against the trend still. Okay, so now you're looking for another resistance, and here is the resistance. Okay, now you have the option of placing a trade right here, or you may think that this trend is starting to exhaust, because this is a long trend. This went from 95.072 to 95.351, and in one session, in a couple of hours, it moved over 3,000 pips. Okay, so that's a huge move, and I probably wouldn't trade any more over here. So let's just see what happens, whether it'll pull back or not. And it's pulling back right here, meaning if you had taken a 30-minute trade off this line right here, you would have won, and you would have ended up right here somewhere. So you would have won that comfortably, but you would have bought it at 301, and you would have won at 315-ish or 318 or 319. So you would have won comfortably there, even if you took that trade. I wouldn't take that trade though. So now you have a new point of resistance. You're seeing if it bounces off this thing, if it's a strong point of resistance. But look how it bounced off here, but it shot back down. Okay, so now you're not looking for anything. Now that this support, old resistance, new support is broken, I'm gonna get rid of this line. I'm gonna wait for what's happening with the market now. Okay, so remember, you didn't get rid of these lines because it didn't break this line yet. Okay, it didn't break this line, or else I would have gotten rid of this line. This was a solid point of resistance and new support, and it bounced off. So you keep this line, but once it breaks that line, I get rid of the line, and I wait to see what happens with the market. So see, it's bouncing continuously off of this, but again, I don't know whether it's ranging still or it's trending, so I'm not doing anything right now. And for good reason, because it continues to trend. Okay, so now you're looking for new higher highs. Okay, and you see it's just doing a bunch of random stuff right now. So you don't want to do anything in the market when you see no logic behind these trades. So this basically is touching the old resistance right here, and even though we could draw a line here and it could bounce off here, it broke this line. So we're staying disciplined, and we're removing this trade from our vocabulary. Okay, and we're seeing what happens with this market, and we're seeing what points it's bouncing off of and what it isn't. Okay, so it's touching this part again. Now you could take a trade on the put side right here, because you see that maybe the trend is over, but you don't know if the trend is over yet. Okay, it hasn't come down and retraced far enough back. And in this case, it did bounce up. You would have been in the money. Now let's just get rid of this because this is invalid now, this line. So let's continue. Now if it bounces up here again, see, notice how it came down here, up, down, up, down, up. So now you can probably be confident that it's going to be ranging. But you can't be too sure, because you don't know if the red retrace hasn't broken any of these lower highs, then you don't know whether it's, if you draw a line still, it'll still show that there's an uptrend here. So you wouldn't want to take a reversal entry. See, this line right here is connecting all the retraces, all these together. Okay, so 1, 2, 3, 4. It's still doing that, so you don't know whether it's ranging or trending still. So I wouldn't have put any put options here. I would have waited still to see what happens. Okay, you would have won that, but then that's okay. And still, it's doing the same thing. It's still touching this line. Even though it touched twice, I don't know whether it's a range or a trend yet until this horizontal line significantly breaks. Okay, let me extend this line right here. Okay, so see, if you had put a put option so far, you're out of the money, and yeah, you would have lost that trade if you did a put option because you don't know whether it's trending upward still. And luckily for us, it's still trending, or luckily for us, we didn't place a trade there. See, this line is still connecting all the reds here, so it's still bouncing off of this line, showing an uptrend. You want to wait for the trend to end, and you know it's ending. So you created a new high here and a new high here. So I'll just put the line over here. Let's put a price level here. Okay, and it's just consolidating. It looks like it's consolidating. And this long wick shows me that, you know, it's starting, the trend is starting to weaken. The higher highs are becoming smaller and smaller. Okay, so we'll just move this line here. You don't have to, but we're just trying to figure out what's happening. We're not taking any trades right now. Okay, so you notice that it's kind of bouncing from this section right here, this resistance line. And we're waiting for this trend line to significantly break before we even think of a range trade. Okay, so now you see the trend is weakening. Okay, so it has pretty much weakened right now and has significantly veered off of course. Okay, so now you have your old support line still, because remember, all these range based trades are kind of bouncing off this, and you have your new resistance line. So you're looking for what's going to happen with these two lines right here. Can it bounce off? Now see how it's bouncing off. Now it's obvious what trades you can take here on these support and resistance lines. So let's see if it touches resistance, and it does, and you technically would have been, this is hard to say whether we've been in the money or not, but because of these long wicks, I probably would have stayed out of the market, because when there's huge wicks, you don't know where the price is going to touch and not touch. Okay, so I would have probably stayed out of this market. In fact, remember, trends can happen such that it'll trend, range, and then trend back up again, or it could go down. You don't know that yet. Okay, but here, because this is a strong support line where it's pretty much bounced every single time with not as long wicks as this, you could probably place a trade here to the upside and you would have won that trade. But remember, I usually wait when there's huge wicks. I wait till the wick, another wick is formed on the next candle before I place a trade. So regardless of which candle of these I took the trade, I would have waited for the wick and I would have been in the money regardless. Okay, same here. If you had waited for the wick to form here, you would have been in the money so far. Yeah, you would have been in the money on this trade as well. Okay, but remember, these are range-based trades you're taking. There's no point that will be exactly the same. They'll all be a little bit different, but as long as it's in the same vicinity. That's why I like more trend-based trading, where you're trending the pullback down. Now, let's see what happens here. So it touches this section here. And you could technically place a trade to the downside, but I wouldn't. I usually like only placing 1 or 2 trades per trend or range or another trend. So I would probably stop it right here. But if you had taken that trade, you would have been in the money and you would have won that. So far, about 90% of your trades that you would have taken, that I showed you right here, you would have been in the money, you would have won. Even this trade, see right here, you had about 1, 2, 3 trades just off of trending, following the old trend or the upward trend by buying the pullback. Okay, so buying a call option here, buying a call option here, buying a call option here. We don't know what's going to go down. Yep. So you would have won this one too. So already you see 1, 2, 3, 4, 5, 6, 7 trades that you could have taken, all following the trend that you could have taken. And if you had, let's say, $100 you put into each one of these, 7 times 80 is that's already 540 bucks you could have put in your pocket just in this amount of time, and that's the day so far. In that day, you would have made 540 bucks. Now imagine what you could have done with $1,000. Okay, just added another zero to that 540, and that's what you would have made. So let me explain to you really quickly what my blue lines are, what my rationale was behind it. So this is today. This is Tuesday. So by the time it got to this market, I was probably sleeping or whatever. I saw that, it was coming up, and I saw that this was a strong place for a pullback. Okay, so how do I determine that? When there's a long trend and it comes back and it starts creating another relatively long retrace, I know that this is a strong point of support. Okay, when that happens, there's a strong point of support, and these are amazing to trade because then it pretty much always bounces off whenever it retraces. Okay, now I also put another blue line where old support was, because I thought that when it came down and broke that old support and retraced back up, it would create new resistance. Okay, and it obviously did, and I placed my trades right here. So I have a mark here, an alert saying that if it comes back up here, I'm going to place another trade, or I'm going to analyze what of course the candlesticks look like before I place another trade. But again, I'm not going to place it right here. I'm going to wait for it to pull back a little bit before I place a put trade. Okay, and I thought I had another mark on this side, but this blue line is to alert me whether it'll come down here again and retest support. And if it does, I'll analyze the candles and I'll likely place another trade on the upside. Okay, so let's set up an alert for all those people that aren't by their computer all day. So you right click. First of all, you want to make sure whether on this top left you have mark or bid. If you have bid or mark, this is what you do. You right click on the line. You don't need a line. I'll show you how to do it without a line. You right click on the line, go to alert, and you press either bid or mark, whichever one's on the top left. Okay, so in my case it's mark. Okay, and you want to change this setting right here, at or above. Now, because it's support, you want to make sure it says at or below that support line. Excuse me. Excuse me. And then you press create, and then this tag will appear. Now you don't need a line. What you can also do is right click at the area you want to put a line. Let's say you want to put a line right here. Right click and you go to alert, and then you do the same thing. Press mark or bid or whatever it is. And that's basically it. This is Monday's analysis of the markets for AUD, JPY, and hope you enjoyed it and learned something new. And we will be doing this every other day. I have other strategies though too that I want to kind of start doing videos on and help you guys in determining what to trade, when to trade, and how to trade. Until next time, this is Farouk. Talk to you guys later.